Every now and then, gold experiences these monster sell-offs late on a Sunday night or in the early hours of a Monday morning, depending on where you are in the world. And the market is barely open, it's thinly traded, so it can't absorb any major trading volume. And then somebody comes along and dumps several $billion worth and the price crashes. And as a gold investor, you can't help thinking, why do I bother? And I have to say, as someone who's been several years in this game, I'm not entirely sure why I do. And we got one example of this on Sunday night. Gold was already weak going into the weekend. The selling actually started on last Wednesday, with gold around $1,835 an ounce. But it didn't feel like anything to panic about. And by Friday, we were still above 1,800. And then on Friday, we got stronger than expected US employment data. 943,000 jobs were created in July, and that beat the consensus expectations of 870,000. Meanwhile, wages also rose by more than expected, and the unemployment rate fell from 5.9 to 5.4%. And the US indices, as a result, in many cases broke to new highs. They went up and gold started selling. It lost $40, harsh but not that unusual. And then at about 11 p.m. on Sunday night came the big wallop, and I'd committed the cardinal sin of looking at my phone just before I went to sleep, and as a result I didn't go to sleep. I even told myself not to look at it, but I still did. And in a matter of minutes, gold dropped by almost $100. If you want the actual numbers, it went from $17.64 to $16.77, with 90% of that move coming in 15 minutes. It was a proper flash crash. Now, I've always instinctively opposed gold market manipulation theories. I've had many conversations into the early hours with avid gold bugs who know more about it than me, and I've never been entirely persuaded. There's almost always an explanation that comes under the category of incompetence rather than conspiracy. And I've always felt that cockups are a far greater driver of mankind's evolution than historians, market analysts, and behavioural psychologists would have you believe. Nevertheless, my immediate thought was that episode stank of manipulation. It was blatant. And often your first instinct is the right one. Often it isn't. But this was so obvious it was verging on the shameless. When you're selling something, you want to get the best possible price for it. Why would you dump several billion dollars worth of something onto a market when there are hardly any buyers around? Surely you would wait until markets are active. Let's say you have a banana business, and you wouldn't walk into the market and sell all your bananas late on a Sunday night when there's nobody there. You'd at least wait until Monday when there are customers walking about. And nor would you buy next year's stock of bananas when there are none for sale. You'd wait until there are plenty of vendors. So the obvious explanation is that somebody somewhere wanted the price of gold down, and they were beating it lower when there was nobody about. Now, who would want the price of gold down? It might be some fund with deep pockets that's playing games with the market. It might be some government that doesn't want the gold price higher because a higher gold price is a canary in the coal mine of their monetary policy. But then again, there is an easier explanation. Somebody was forced to dump. Somebody, some fund somewhere, got a margin call at some point over the weekend after Friday's sell-off, and they had to liquidate. It's happened to pretty much anyone who has ever used some kind of leverage, from futures contracts to spread bets. So once again, we will hear the argument that you hold gold because it's insurance. We'll see that resurface, rather than the argument that any investor really wants to hear, which is that we hold gold because it is going higher. So now the technical picture for gold looks ugly, frankly. All the moving averages are pointing down. On the plus side, the March lows at 1675 has held, and as long as we're above them, at least the end isn't nigh. But the technical picture's ugly. Just as I said, just about every moving average is sloping down. If it looks like a bear market and smells like a bear market, it is a bear market. Sorry about that inconsiderately noisy, plain. Now, you can cite all the arguments you like about fiat money, debt, inflation, suppressed interest rates, money printing, unsustainable government spending, misleading government statistics. I know them all and I agree with them all. The gold price should be going up, but it isn't. It's going down. The market is wrong, I'm right. Well, you know, whatever. The brutal truth is this. Over the past year, gold and silver have been outshone by pretty much every other asset in the world. A year ago, gold was north of $2,000. Silver was testing $30. Today, gold is what, $17.50, silver's $23. Find me another asset that's fallen in price with all the money printing that's going on. There aren't many. I want the price to go up as much as you do, so don't have a go at me. I'm just the messenger. I'm just reporting what's written on the ticker. This might not be 2013 all over again. There's not nearly as much excess among gold miners and leverage speculators as there was back then. I don't think this bear market will be anything as bad, but gold has a tricky few months to work through and it badly needs to hold above 1675. If it can, then I'll start to feel optimistic again about this most analog of assets in a digital age. But if it can't, then, you know, I don't know, we're going to head back down to 1500. So in the short term, I expect us to rally. Let's hope this bounce is not of the dead cat variety. But as my friend Charlie Morris, who writes the Fleet Street Letter, says, the main problem that gold has right now is that the economic recovery is going too well. He's kind of right. Meanwhile, as all this is going on in Western markets, watch the Chinese keep on accumulating. Thanks very much for watching. I'll be back with another video very soon. In the meantime, please subscribe to my channel. Cheerio!